Nobody tells you this, but the most important decision you'll ever make in the age of AI isn't whether to panic or ignore it. It's learning how to thrive alongside it. Mass layoffs are happening everywhere right now, while companies invest billions in AI. Microsoft, Google, Meta, Amazon, they're all cut thousands of jobs while pumping money into automation. It's not a coincidence, people. My name is JD. I teach struggling traders how to pass prop firm challenges and improve their overall trading performance. I wish for you to have an experience like Stojanowski. They said they see the power of the system when they made $4,300 in 20 minutes. Boy, these testimonies are getting better and better. If you want a system that works, hey, scan this QR code or just comment system. I am offering it right now for a 75% discount. This is for a limited time while I get the word out and collect those good testimonials. I'm that confident you will become a better trader on the sudden. Tech giants are strategically reallocating resources away from human workers and towards artificial intelligence systems that can work 24/7 without breaks, benefits, and complaining. A recent study found 45% of laid off workers are desperately searching for new income sources online. But most are looking in the wrong places. They're fighting for the same diminishing jobs while the opportunity is hiding somewhere else. I've watched this pattern unfold across industries from customer service to content creation to software development. Each time, the workers who adapt quickest are the ones who survive and even thrive. Trading markets don't care if you lost your job to a robot. They don't care if the economy is up or down. Money moves in both directions. This is exactly why financial markets offer a unique opportunity for those displaced by technology. When stocks fall in futures, traders can still profit going short. When markets rise, long positions generate returns. The key is understanding how to read market signals and position yourself accordingly. The strategy isn't complicated. It's about understanding market patterns that repeat regardless of economic conditions. These patterns emerge from human psychology, which remains consistent even as technology changes. Fear and greed drive price movements today just as they did 100 years ago. We focus on identifying specific setups that have historically high probability outcomes. Then we apply strict risk management to protect our capital during inevitable losses. We're not trying to get rich overnight. We're building consistent income streams to replace vanishing jobs. Each day, we look for 2 trades max rather than forcing trades out of desperation. Some days we might not trade at all if conditions aren't right. This patience and discipline is what separates successful traders from the 90% who lose. The people who survive this massive shift won't be the ones who fight the hardest against AI. They'll be the ones who adapt fastest. They'll stop competing directly with machines and instead leverage technology to find new opportunities. They'll develop skills that complement AI rather than trying to outperform it at tasks where humans can no longer compete. If you want to learn the exact system we use, scan this QR code or comment system for the discount link. This isn't about getting rich. It's about not getting left behind. It's about financial independence in a world where traditional job security is rapidly disappearing. Now it's time to put in some work. Study. Roll it. Hey guys, today is Friday, November 7th, 2025. This will be our work study lesson for today. So we just start at the beginning of the session. We are trading the ES futures contract. I trade on the 1,000 tick chart so that everybody doesn't have to ask me in the comments. And let's see what we get, right? Let's read the price action. We're going to read the price action from the beginning to the open, catch up. Maybe we can get it traded to open. Let's check it out. All right. So let's get going here. All right, so the session opened right here and gap down a little bit, nothing major. Of course, filled that immediately. I already had my key entry levels drawn, so this would have told me right away that we're in a range, so range rules apply. You see, as the 21 EMA would have confirmed that with this roller coaster look. All right. And of course, we wouldn't have had all that information. We would have just had, you know, this at the open. Well, actually, this at the open. But anyway, I would still have my lines. I would have known to just not do anything until we get to this key entry level or this key entry level. And when we got here, bang, what happened? All right, so we made it to the key entry level. And if I'm just reading a price action, this is nothing but trend down, trend break, retest the new low. This market cycle is over. All right, that's how I read a price chart. So what I would, after this market cycle is over, I would expect the new market to start in the other direction, which is kind of what happened. But what it did is this is a range fade. It came down to our key entry level. All right, we tried to break out. It failed. Look how strong it came back in. Listen, people. When you get to a key entry level, well, when you trade like I trade and you understand about key entry levels and the volume that's there and the orders that's there and the order flow that's happening and everything that's happening behind the scenes that most traders are blind to, well, when you have that information, like we do, too, when you see this humongous candle bounce right here, this is kind of situation you don't even need to set up because you understand levels. So because we got this reaction right at this level, I don't even need to set up. I don't. This huge candle tells it all for me. This huge candle was saying we should be about to break out in truck, right? It hit a whole bunch of buy limit orders that was sitting right here. And that stopped that momentum. Not only did it stop it, it stopped the momentum and surged up. So it took a lot of orders. Listen, it took a lot of orders to make this candle. It took double that amount to push this thing back up and break higher. So hey, or triple. Either way it go, this candle right here told me everything I need to know. I would have went right there and bang, that would have been an easy win. But if you wait for the low, push up, higher low, here's your classic higher low setup that we teach in our system. And you go right there. You go right there. Signal candle wasn't great, I'll admit, because it stemmed out at the top, but I like it. I still like it. I know we're heading up. We're coming off the bottom. We got this huge candle here. We're standing above the 21 EMA. I like it. Signal candle's not perfect, but it's good enough. Especially if you just sit a buy stop right here and like, all right, if it break higher, I'm going. It would have kicked you in and you would have been off to the races. Bang. So then we're trucking. Okay. And then we got a little break here, so we would expect what? A trend up, trend break, retest the new high. That's what we would expect. Okay. And guess what? It tried right here, and we didn't get it. Now, whenever the market tries to do something twice, push up once, push up twice, and can't, and normally go the other direction real hard, which is what it's doing right now. So after we failed to make the second leg up, we just turned, folks, and we can't do anything because we got to wait till we get back down to our key entry level again. This time when we get there, we break out. Okay, so we get to the key entry level. Man, I don't know if you would have saw this, but here's a drop base drop setup. Because we pulled back. You thinking it's going to fail again, but when it comes back out again on this candle, I'm like, all right, we might go short. And then when I get this red, green, red, wifey pattern look, but this is also just a drop, little green candle. And when this candle closes, you go right at the bottom of it. Boom. That's a drop base drop. And bang, that's a nice one. It's a drop base drop happening right off of what? Our key entry point level. Again, magic happens at this level, folks. Look at that magic up. Look at this magic down. Magic happens at my key entry point levels. All right, so then what happened? All right, here's the classic. Now, if you missed this drop base drop, if you just hang tight, prices normally come test breakout areas, and we broke out. And what do? Pull back. Why are we pulling back? Because we normally test breakout areas. All right, so if you was very aggressive, I ain't gonna stunt. You could have just went straight up right off of this first touch right here. Bang. Because you see this thing trucking. You see you get this falling hammer, and you are a mile away from the 21 EMA. You got a long way back. So you may just take this as a scalp. You may just take this as a scalp. You're also looking at this leg, and you got a trend down, trend break. So what you're expecting, retest the new low. You go right there. You go right there. But if you don't go right there, you want to be more conservative. I get it. You get a good high. Excuse me. You get a good high right here, lower high. Look at this signal candle. Right there. Classic lower high. Go right there. Go right there. And guess what? Again, look at where all of the awesome entries are from. My key entry level, awesome entry. My key entry level, awesome short. My key entry level, awesome short. I'm just saying, some people think trading is luck. We know different. Okay, so you take one of these lower highs and what happens? Bang, right? Awesome. But that ain't no full leg though. I mean, that ain't no full leg. So if we measure what we would expect here, I mean, this is a nice drop. So I would say we have the potential to come down to around in here, 66.90 area. That's the potential. But man, actually it did make a new low. I mean, it made a new low, but I mean, it barely. Boop, but that's a new low though. So that's a trend down, trend break, retest new low. Some could say this market cycle is over. We got to see, because that's a weak leg though. That's a weak break, but it's a new low all the less. Then that catches us up. And what are we doing? Ranging. Oh, this is going to be an easy call, y'all. So let me mark up this range and then we're going to talk about it. Mark up this range, then we're going to talk about it. So it'll be ready to go. So we're ready to rock and roll. Okay. So we're under both of my key entry point levels. That automatically gives me a bias to go short. All right. So I'm looking for a short at the open. We want it to be somewhere around the 21 EMA. Your best entries are always on, off, or around the 21 EMA. So I'm looking for a short off the 21 EMA. Could be a wifey trade, could be a second entry short, could be a lower high, which is also a variation of the wifey trade. So right now we're in a small range. So I'm looking for range fades off the top because I believe the overall bias is short. Usually when you trade down into a range, you're going to keep going that same direction. Same thing going up. So we're under my key entry point zone. We're in a range that's trying to stay around the 21 EMA. And we traded down into this range. So the bias will be that we're going to break out the bottom. Hey, all signs say go short. I'm going short at the open. My guess is we're going to get a range fade because they're trapping longs right now. So my guess is we're going to get some type of range fade right out of this little range at the open to go short to continue the downtrend. That's the call. We're going to see what we get. And we ain't got long to wait either. 7 minutes. I'll be back. I don't know what I was talking about with 7 minutes. We got 3 minutes, folks. It's almost countdown time. Let me make sure my stuff is right. We had an issue, what was that, Monday? Monday, because my ATM strategy wasn't set up right. So we ain't trying to do that again. Not trying to do that again. Let me get a quick prayer in. You know, it's always good. You know, why not, right? Got a little time. Market finna open. You know what I'm saying? Put a word up to Yahuwah. Give me what to do, how to do, when to do it. Let me execute. Let me see the trade coming a mile away. Let's get it. Praise ya. All right, 30 seconds, y'all. No, I'm off. I'm going to have to put my bifocals on. Yeah, y'all. The kid aging, man. I know I look young out here. I'm an old head. Let's see. I'm actually an old head, y'all. Y'all wouldn't believe it. Told you how old I was. All right. We on that countdown. So, again, my play is to take something off the top of this baby range here because I'm expecting us, because we traded down into this range, I'm expecting that to keep happening. So we gonna see what we get. From a small scale, this is a trend up, trend break, retest a new high. Once we break higher and bounce at the top of this range, it'll be a nice, yep, here it come.
Order submitted.
Here it come. They're gonna push up, trap as many longs as they can. It'll be a third attempt higher. 1, 2, 3 that fails. The farther away from the 21 EMA we get right at the open, the better for this play. And let's make things bigger too out here so we can see. Here we go. Think we can see the price action now. Getting close to my favorite time of day. Folks, if you don't know, now you know. We'll see what we can do here. Oh, countdown. Y'all know I love my countdowns. 8, 7, 6, 5, 4, 3, 2, 1. Game time. Game time, folks. Here come the lower high. Oh. Push up. Your best entries are on, off, around the 21 EMA. We gotta wait for this sucker to pull back now. I think it's gonna make a little wifey trade right here.
Order filled.
We are in. Put my stop where it goes, above the swing. We gotta break out now, folks. Ooh, that was a nice candle. Push through, break out, break out, break out, break out, break out. Break out. That's a nice breakout. Closing your low. Closing your low.
Stop filled.
Good trade, good trade. All right. So, if you want to learn how to increase on the sudden, check that link in the description and holler at your boy. Until next time, my name is JD, and as always, I wish you increase on the sudden. Bye-bye.